It's not what you think it is. It's a seltzer water. It's been a changing of chapters here recently. I think the last time there was a market update made was about a year ago. So kind of fun to be back in the seat of things, back in the saddle. Hope everybody's doing well. It's been quite some time since there was a video made, especially anything with to do with markets and not something miscellaneous. So, been some changes, and we're working on the screen real estate situation. There's kind of a lot going on here, and real quick too, today's sponsor is me. It's OnlyFlows. It's the best options flow service out there. It's the best social media service for traders, for anybody in the financial markets. It's even got a robot voice that I won't play right now because people have been complaining about it. But it's fine. OnlyFlows.app, only $4.99 a month. We have some really awesome stuff going on, and of course your boy built it, and going on about a year now almost, and it's just the best thing I've ever built. I'm so proud of this thing. There's still a lot being worked on and new things being added, but it's to a really, really awesome point now. And anyone that's been along for the whole journey, I can't thank you enough. The last time you guys saw this, I think there were 4 or 5 tops of the menu items here, and now you can actually scroll through them. There's enough that you can scroll through them. And we'll have another little sponsor join in with us. Hamlet the Kits. This is Chester. I don't know if you guys have ever seen him before, but he's the fluffy older brother who needs to lose some weight. Or that's a tumor. Hopefully it's not. We're gonna find out. So anywho, $4.99 a month. Words. And there's just so much cool stuff here. We're going on 2 minutes now of no market updates, so we're going to jump into that, and there's going to be plenty of videos about OnlyFlows. So join today, onlyflows.app. Get in there. Price goes up sometime soon. We've been saying that for a while, but this time I mean it. If you buy in now, your rate gets grandfathered in. It doesn't go up. We're going to at least $20 a month sometime in the next couple weeks. Alrighty, let's get into it. So I've got a lot of simplicity going on, believe it or not. We only have 4 indicators pulled up. We've got volume, we've got 3 moving averages, we have the let's see if I can remember these. I know this is the 200 SMA. This is, I think, the 9 SMA, and then this looks like a 50 EMA. 200. We were on the money. Cool. So on our daily, bounced off the 9 SMA, and we're being rejected for the past 3 days. Just looking at the wicks here, wicks will tell you a lot about what's going on with the actual underlying behavior of a security. The wicks will tell you more than the body. Well, why is that? Why would you make such a bold claim? This wick, for example, on September 6th, SPY closed in the red, opened at 448, closed 446 with a low of 443. And if you see where it actually closed at, it's just below that 9 SMA. And now the thing is that people who talk about moving averages all have, it's just like asking somebody what their lucky number is. You're going to get different answers every time. There's no benchmark lucky number, 69. But other than that, there's no benchmark. And so the way that people end up using moving averages is they overcomplicate it and they lose the value of what moving averages are for. Moving averages are the second most universal language that you can find within markets. The first is VWAP. We'll make a separate video about that. But in terms of moving averages, that's going to be your second most universal indicator where everybody abides by them. Everybody behaves from them. It's not that they're somehow special. It's just because everybody picked those that somehow becomes a benchmark standard. The more people you have using the same moving average, the more adherence that the market will have to it. That's really what it is. VWAP is the only ubiquitous standard that has no opinion or magic numbers to it. So typically, it's going to be your 200, your 50, your 20, and your 9 SMAs and EMAs. The 200 EMA, I'm not too much of a fan of it, but the 50 EMA I am. Everything else, simple moving averages, and then stick to your common time frames, your daily, weekly, monthly. And that's where you're going to see the most respect. Now, the 9 is kind of an oddball. People have theories and whatnot, but I'm not going to talk about that right now. So, for example, back to this, we got rejected off of that 50 SMA, or in this case, the 9. Yeah, the 9 SMA. And the claim of wicks tell more than the body, well, this is exactly it. Bulls got thrown down to the floor, and they fought back. This was actually a really strong candle. That's some people might call that a hammer candle, but that's a lot of, that's like a what, 1.5%, 0.5%. That's a 0.5% redemption arc right there. You get thrown down 0.5%, and then manage to come back from that, and you just barely get rejected. Barely get rejected from that 9 SMA. And the following day, you know, if all you saw was this candle, let's see if I can actually clean this up. That's a pretty strong reclamation. That's solid. That I would go long on that. Looking at the volume, maybe not, which you can't see. That volume, that was a lot of selling. But that's a good candle. But because of where, at least from what we're investigating, it closed below the 9 SMA. Just didn't cut it. Good news is, picked up at the 50 SMA and reclaimed, got rejected again from it 3 times, but then finally broke out of it. And that's a really strong trend to have. That's a really strong chart to have. We even see that volume kicking in, more so than the rejection back here, which again, you can't see. So that's solid. So I'm going to guess things are going to go up. Now let's really kind of go beyond the charts. Let's do some only flows. So funny enough, today there were a bunch of late prints for some SPY calls, and we're actually going to go into SPY's ticker page. Actually, no, we're not, because I want to show you the overview. This data up here is awesome, and we've finally added some what is this button action, so you can just hover over it, and so now you know what a put to call ratio is, and you know what to look for. So we're just going to go by SPY and trades greater than or equal to 25,000 in premium. And for those that are on mobile, I'm going to zoom in so you can actually see. Minimum size, I just typically set that to 1. We'll do some sweeps here in a second, and that's enough results. And so at the top here, we have, that is an incredible put to call ratio. That's insane. That's insane. So typically anything greater than a 0.7 put to call ratio is considered bearish. Anything below 0.3 is bullish. In this case, we're well exceeding standard deviation metrics for a bullish put to call ratio at 0.07. And so take your amount of puts divided by your calls, that spits out a certain number. That number happens to be a ratio. Or if you're in the case of David Marino Jr., you're getting ratioed by me. So this is really bullish. Total trades, we have 1,000 loaded. This goes back probably at least a couple days that we're seeing data-wise. And of those trades, this bar right here shows how many are calls. So this bar is about 70% calls, it looks like. Maybe 80%. Call premiums, we're seeing that just how much money was transacted from call contracts alone, which is 241 million. And then down here, we have a display of what is in green, which is out of those call contracts, how many were bought. So where the price of the trade is crossing to the ask. And in red, we have sold. Now that looks bearish, but when you look at the amount of call or puts sold, which is over here, same thing, just with puts, we're actually seeing more puts being sold. I'm not sure if it's easy to see that discrepancy or not. But you can see that we actually just by maybe 5% more puts being sold. And puts being sold is a very bullish thing. Call volume, same thing, just the amount of volume, and then how many were bought, how many were sold as a percentage. Put volume, same thing. And then the average out of the money percent. So out of all these orders, this is calculating from this table. So if I change this to only orders that are 50,000 or more, this bomb emoji, this is powered by Emoji Labs, which is our way of letting you make your own trade visualizations. So with this, I can actually say, okay, anytime, in this case, where the days to expiration is 0, which kind of, they must have closed these out, actually. Maybe? Or it was just a hedge by market makers, I don't know. But this is when the trade has 0 days to expiration. So actually, in this case, all of this isn't what we thought it was. Glad I picked up on that. And then, weekly contracts where days to expiration is less than or equal to 5. This is a bug, don't worry about that. Bullish, where price is greater than or equal to the ask, where the type of trade is a call. And I can make these and edit them and do whatever I want. I can share them. I can copy them. Great stuff. So in this case, these were all 0 day to expirations being processed at the end of the market. Still could have been a late print. I'm not sure. This sponge over here, which is really hard to see, but I'll make it bigger. This is when size is greater than open interest. So that's also a really big hallmark for spotting option trades that actually have something worth looking at. But anyhow, going through this, we see a lot of bullish premiums going on, and we see a lot of bullish volume. Call volume actually was through the roof. I'm trying to figure out how much of that was in those late prints. That's very odd. But even just going through, we have today at just after market close. No, still 0 days. Okay, we're going to do this. Minimum days to expiration, we're going to set to 1. Okay, so now we got rid of that. And a lot of put volume being bought. That's interesting. Maybe it's not as bullish as we thought it was. I did see a $3 million call order coming in to the ask. 35 days to expiration. Sweeps. This is at the midpoint, so that's not too convincing. The size of it wasn't that much. Let's see, more $1 million orders. So let's just look at sweeps. Let's do that. And we'll do out of the money by at least 3%. Here's all the sweep orders for SPY, and we've got quite a few. But thankfully, because they're all sweeps, you can actually get more out of this without having to kind of filter through and dig for certain signatures and cues. For those that are not familiar, a sweep order is a type of order where if an institution has some urgency to buy or sell contracts, typically what will happen is they'll submit the order, and if they have time to wait, it won't be marked as a sweep. But a sweep order is where that one order has so much magnitude to it, or size, that multiple exchanges have that particular order purchased all at the same time. So I think there's 10 or 15 different options exchanges, and with these orders, some of them are so big that those who are willing to sell them collectively don't have enough. And so then that one order is created as what is a sweep order, where the liquidity is sought after across any exchange that has it. And these are really, really, really telling orders. So with that in mind, sweeps can go both ways. This is something that has always been kind of misconstrued, I think. A sweep order can be a buy order or a sell order. There's not necessarily any particular side that it's exclusive to. A lot of people think that it's just buying, but it can also take place with selling. And so that's just something you kind of have to keep in mind. This goes both ways. So there's a lot of ambiguity in options, don't get me wrong. But just bear that in mind, and together we'll figure this thing out. or we're going to be wrong. Nah. Okay, so today there weren't that many sweeps. Of course, because sweep orders are very they're a type of order that telegraphs what the intent is, and we actually have a lot of bear stuff going on here. So we can see that our out of the money orders, which we have set to at least 3% down here, are are indicating that we have a lot of calls being bought. This is bullish. I can't read. This is bullish. We have call premiums being focused for purchasing in this case for our sweeps. And in terms of the premiums for puts, we're actually seeing a lot more selling than buying. Okay, so I actually went back and realized that I should just set it to today, and then we'll kind of walk back through the week as we go into this. So we actually are even more bullish than before. A lot of the volume is being focused on the put side, which is predominantly selling on the put side, so that's bullish. But most of the volume has been focused into puts, which means that based on our premiums, if we look at that ratio of premiums divided by volume, we're looking at some concentration on the calls, whereas puts seem to be being sold in mass. This tells you that institutions and bigger players are probably giving up on being bearish, at least as far as SPY goes. Going into today, it looks like we had about 110 sweep orders at market open, or actually no, 11:14. Let's see what happened there. I'm sure it went up at 11:14 a.m. Where is, okay, so 11:14 would be right here. Looks like they got into the move late, and if anything, they got caught at that, I think that's a doji is what they call that. Albeit there was a lot of volume, so you would kind of want to see that kick in after this bad looking candle. But nonetheless, they went back into the green within the next hour or so, and you can see that based on that entry, let's see, horizontal line. Yeah, so they had bought in at this point here, which obviously saw some drawdown take place. SPY declined about 1/5%, and going into around noon, it's decided to pick back up. So if you were to catch that entry, you might have gone into the red for about 45 minutes. But based on what ended up happening, well, you went into the green within that 45 minutes. So not too bad. And this is actually going to be, we'll do this in a bit. This is a really cool feature. And so then we had calls at the above the ask, actually, is what that purple price means. Let me zoom in a little bit too. And a lot of put selling. A lot of put selling. Jesus. Yeah, that would have been your go ahead. That would have been your signal that things were about to go up. Look at that. Look at that. I mean, 11:19 is when that started, going into noon. That's crazy. Yeah, so put selling going into this. And then going into noon, a lot of put selling. That's crazy. That's a lot of put selling. And now the way that we know if this is selling or buying is based on which side of the quote that the order executed at. So the bid in this case is 488, and then the ask is 489. And if we look at the price that is executed at, we're looking at 488, which tells you that the person who, there's always a buyer and a seller, but if there's a buyer, they're willing to jump to the ask. If there's a seller, they're willing to sell to the bid. And so based on this case, we had aggressive selling taking place on the put side. And that was probably one of the signals. Now, the size of these isn't considerable, but the premiums are. We're seeing a lot of premium go into that. I mean, these are anywhere from $12,000 to $14,000 orders. It wouldn't surprise me if this was also a split trying to be masqueraded. Going into 1:30, we had a lot of calls being sold. 4 million in calls. We'll have to check the open interest on that tomorrow on that particular contract. We can actually click into it and see what the activity was on it today. And so this 470 call for the December 15th expiration looks like somebody closing a position is what I would think, because going into 1:30, which would be that would have been here. Yeah, so right about at the top of that move is where you saw that sell order take place. Yeah, so that kind of was your marker there. And then kind of investigating here, let's check the 3-month activity. So open interest has been going up and massive sell. So that's an interesting one. Yeah, we'll have to keep tabs on that. Tons of put selling, tons of put selling. Somebody buying up the 380 tranche, $2 million. That occurred at the midpoint, but based on the open interest and the size of it, it looks like somebody opening up the position. At the very least, if your size of the order is greater than the open interest, it makes more sense for someone to buy something that has more open interest than is selling to increase open interest. And we do see, actually, no, that's some selling there. I don't know. We're gonna keep an eye on that because if you can't even see it. We're gonna keep an eye on this because we'll go to the 6-month activity real quick. Just looking at this, yeah, huge selling that took place, and then the price of this went down, which means that the market went up. So that's your indicator for how put selling can indicate bullish intent. And that was obviously sold short because you saw the open interest skyrocket like that, and we saw it sold here. Interesting. So maybe that was bought back. Yeah, I would imagine that's bought back. That was at 10,000. They sold at 10,000, and the size is 15,000. So maybe they're going back to the other side of it because they're buying 15,000 if this is the same buyer, same seller. But all in all, tons of put selling. Tons of put selling. Well, I think the verdict here is bullish. It's bullish is what we're going to go with on that. Some trade signals today. And we'll give her a second. Meta bullish, Carvana bearish, Microsoft SQQQ. Interesting. Very interesting. We got some back tests here as well. We can see that this 451 call 5 minutes after, or 15 minutes after, it was up 5%. Let's take a look and do some really short dated stuff. Let's see if people were playing like degenerates today. So I set this so that the maximum days to expiration is 5. And once this loads, we're going to see just how much of degeneracy was at play here today. 6%, 6%, a lot of Tesla calls. SPY calls, some SPY puts. Let's see. Oops. I'm going to guess that was somebody closing out a short position. Ended up selling going into the end of the day. Guess they got squeezed out of that. Blue, this is actually something that I've been keeping an eye on. Some Pfizer calls. 13,000 in premium. UVXY calls. Probably a hedge. Target calls. Carvana calls. I can see this thing moving. Oxy. Mullen calls. TWOU. Nothing extraordinary. No 0-day heroes today. Yeah. So this video has gone on way too long. So I've got a feel for what it's going to be like to make videos about options flow. So we're going to condense this and really hone in on kind of expediting this. But at the very least, you kind of understand where the style of this is going. Sentiment, though, for tomorrow, it's going to be bullish. It's going to be bullish. Because tomorrow's quad witching, it's probably going to be choppy, just range-bound all day. But I think the positioning that we're seeing, it suggests some bullish sentiment coming into the markets. Just where the chart sits, it's, of course, at that halfway point. No one knows either market crash tomorrow or market goes to 600. Listen, nobody really knows. The best thing you can do is figure out what the data says. And to get the best data, you go to OnlyFlows, baby. But you also turn off the news. That stuff sucks. Don't listen to it. Stop reading FinTwit. Stop reading all that. Just figure out what speaks to you. And by what speaks to you, I mean what does the data say. So I'm gonna wrap it up there. Thank you all for joining me. We'll see you tomorrow. And cheers.